Alix.
Thank you so much, John Tucker. I should point out the S&P is off the lows of the session, just down 0.8%. I feel like my buying the dip question isn't as crazy as maybe we would have thought 2 hours ago. So let's ask it now to Shana Sissel, President and CEO of Banríon Capital Management. She joins us now on Zoom from Chicago, Illinois. Shana, do you buy the dip?
I always buy the dip.
Oh,
okay. But
I mean, the market goes up more than it goes down. Why wouldn't you buy the dip? It's not like the market's going to go permanently down. I'm a big fan of buying on weakness, and there's weakness today for good reason. Also, I feel the need to tell you, I heard your earlier comments about Funko, and I had to have my bobblehead in the shot for that reason.
Oh, so is that a Funko bobblehead?
It is. It is.
Is that your head?
I had to do it. That is supposed to be my head.
all right, we're going on.
I don't know how accurate it looks, but that's supposed to be my head. But I digress. No, I'm a big fan of buying on weakness. We have strong economic growth. CPI coming in hotter than expected is an indication of that. We still have very strong demand. I think the market's weak, obviously, on the fact that this makes a Fed rate cut less likely. But I've been saying all along that I thought the 6 that was originally priced in earlier this year was a pipe dream. Thought it would be more like 3. Now I'm actually going to go really far out on a limb here and say I don't think they're cutting this year.
Torsten Slok over at Apollo Management agrees with you. He was out with a note this morning reaffirming that call for him. Shana, so when you think about your portfolio, think about the stocks that you like out there, how much do you worry about Federal Reserve policy, about the interest rate environment vis-a-vis the fundamentals of those companies?
I think it affects some of the growthier names more than it affects, say, a name like Fang, which is on my list. That's an energy name. I think that's more a supply-demand situation. I think the demand for oil in particular isn't going anywhere anytime soon. But for the growthier names, Fed policy can really impact, the valuations and the potential upside because of just how time value of money works. Higher rates tend not to be helpful for growth names because you got to have more growth. And so, you can't get as much of a premium as when rates are really lower. But I don't worry about it too much because I think the overall tailwinds are so compelling that even in a higher rate environment, higher rates mean the economy is doing well, which will mean that stocks should do well.
And Fang is Diamondback Energy. Just to break that down, that stock trades about $205.85. So you mentioned that maybe the Fed won't cut at all. Does that pare back the amount of cuts you expect overall in this cutting cycle? Because that would also dictate kind of how the economy is doing.
Yeah, so I think that the Fed has a target interest rate. So I think they'll cut as much as they have to get to what that target is. I think it's probably somewhere between 2 to 3.5. It's not 0. I know we got used to 0, but it ain't 0. And so I think we'll get there. If they have to do it faster and there's less cuts, that means that we've had some sort of economic instability. That's how I look at it. If there's more cuts, that means that we've achieved the unicorn soft landing, which I'm still not convinced of. So I don't have an opinion on that. I just think that more cuts means smoother landing, right? That stupid thing when you fly, smooth landing, Air Force pilot. Yeah. So we've achieved a smooth landing. The Air Force is in control. And if they have to cut fast and they're bigger cuts, it's because there's some sort of economic stability and they have to hit the deck really hard.
All right. So a name like Nvidia, which is a name we've talked about with you before, you guys own that. I can't think of a interest rate scenario that would get me off of that story because I mean the fundamental drivers of AI. If you really believe the growth potential of AI, that is got to be a building block story in that. So, how does the movement in today's market kind of impact your thoughts about a big growth story like Nvidia?
Well, you and me both. I don't think the Fed has any impact on Nvidia because of the AI trend. We're so early on there. It's trading at like a 28 times forward earning multiple, which is insane to me. I still look at like just the sheer price of it at over $850 per share. And that's intimidating because my cost basis on it is 250. But not to brag or anything. I don't own that much. I don't own that much, and I haven't added to it. That just sounded really obnoxious. But yeah, so I'm not sure I'm necessarily a buyer, but I do find the 28 times forward earnings compelling. So maybe I jump in here, especially on weakness like today. If it got under, say, 825, I would be jumping in all day long.
You also own Vertex Pharmaceuticals, ticker VRTX. It's a biotech company. Tell us more.
So that's a super volatile company. Biotech is not for the faint of heart. But I like some of these healthcare names right here. Some of the more volatile ones, actually, because drug development is always volatile. You might think you have something great, and then you get to, the stage 3 trials, and all of a sudden everything falls apart. Vertex has some great cystic fibrosis drugs. The stock has been super volatile, but volatile to the upside. So you get some really crazy movement in the stock, but the stock has positive returns. I think they have kind of a dominant position in cystic fibrosis, which is a major concern. That's a major disease that affects a lot of people, and those things are positive for the stock. They have some great R&D, and those are the things that I think are the key drivers. It's good management, smart balance sheet, all the things you look for in a good stock. But it is biotech, so it is not for the faint of heart.
Biotech, not for the faint of heart. Nvidia, one could argue, not for the faint of heart. How do you guys screen for stocks at your shop? I mean, do you tend to go for growth? How do you screen?
So oddly enough, my entire background and all the years I've been in the business has been value. So I know that seems strange looking at like my recommendations here. But I don't screen the way that you would normally hear. I started my career in manager research, and so I used to meet with managers of funds, hedge funds, mutual funds, ETFs all the time, and they talk about their stocks, right? So I got a lot of my ideas from them. So I've met with thousands of managers at this point in my career, and there are like a handful that I think are amazing. And those handful are the ones that I will look at their portfolios. I'll look at their 13Fs and see what they own, maybe pick up the phone and ask them, and find out their reasoning. And then I'll do my own work on the stock, see, does it make sense to me? Is this story something that I think is compelling? But that's how we get my ideas. I don't screen for stocks like most folks who sit there and pick, 20, 30, 40 stocks because they have to manage a portfolio. At any given time, I might be following 10 names because that's not the core of our business, but that's kind of how I get my ideas.
Gotcha. All right, Shana, thank you so much for joining us. Really appreciate that. Shana Sissel, President and CEO of Banríon Capital Management. Crude oil inventories rose 5